What's going on, everybody? Today I want to talk about when you're starting a business in a partnership, or if you have a business partner, should you make sure you go talk to an attorney, and should you get agreements in place, or should you just move forward? When you're first starting out in business, it's really hard. And I just want to tell you a story. I started up a tax firm before Feedbackwrench and Forward, and I had two other business partners. Great men, great people, love them to death. And when we first started, we bootstrapped that company in the basement of our partner's parents' home. Actually, that's where we wanted to start out, and we bootstrapped. When we connected in the beginning, we weren't sure what it was going to turn into. We were rubbing sticks together. I was out at every B&I meeting, at realtors. I was hitting the pavement at Chamber of Commerce events, trying to find new clients for us. And we sat down and we had an agreement. Long story short, the agreement that we made got broken. And here's something I learned. It's very easy when there's no money or very little money for you to be totally open-handed with everything. But as soon as you start having success, and in particular, there's a little thing I want to talk about here. When there is success, when the business is kicking in tons of income and you have made it, the conversations change a lot. Greed can really impact things, but more importantly, something comes up that's very important for you to know, and here's why I think you need to get written agreements whenever possible, at least on paper, signed together and given to each person. Do a video recording of it if you don't want to talk to an attorney. Otherwise, go get a formal business partnership agreement. Because as entrepreneurs, you're going to have the most success when you surround yourself with people who are not like you. Your yin to your yang, right? So I knew that in my former business, if I surrounded myself with accountants, I'm not an accountant. I am a visionary, people engager, and strategic thinker, and action plan oriented. I do not like sitting down and going through accounts receivable, and I do not care about that at all. I want accountants to do that. So I surrounded myself with high detail accountants, a CPA, and another bookkeeping guy. Long story short, what will happen is you will add value in that company in totally different ways. When you surround yourself with people who are not like you, you have the benefit that you can cover each other's weaknesses, and then you can maximize your strengths. But there's a dark side of that. You always, as a human being who is the same sinful human being as Adam and Eve, will overvalue whatever you value. And that's a weird thing to say. That sentence sounds bizarre, but I have found it true that at all turns, I overvalue my own opinion. I jump to a conclusion myself, and I think that my opinion and my take on things is incredibly important. And you will too. And so will your business partners. So when you're surrounding yourself with other types of talent, you're going to add value in different ways. And it could be that one of you needs to be in there a ton of hours. You never have to take a risk. You never have to go prospect a client, run a client meeting. You didn't have to create any branding or do anything that's really outside of a task list. But maybe you have to sit there and answer the phones. And sure, you don't do the big sexy sales or anything, but you need to play a different role. And the result over time will be that you might start keeping score, and you might think that you've worked harder than the other person has. In fact, one of the core problems that happened was I was doing all the sales, all the consulting, casting vision, and landing the client, getting the client, and then wanted to do basically the client management side of it, and didn't want to do the taxes. Well, the tax guys who were, jumping in all early and counting beans all day, that's not the same thing. So you tend to overvalue whatever you value. And the result is that especially if there's 3 of you, 2 of you can gang up on the other one. So if you're going into business, I'm telling you, when there's no money, you need to sit down and write down your agreement. How do you make decisions about how you get paid? What happens to the actual ownership of the company? And fight for your share. Be kind, be generous, be loving. But here's the deal. There's something to be said about being the person who puts together the structure and the machinery of your business, and you got to be careful of that. So I'd recommend getting some business agreements. I'd recommend writing down how you decide who gets paid what, and you need to be upfront about how you're going to value things, because you will value it differently. And hours in does not equal results out. There are certainly positions in every business that just need somebody there to give great customer service. But in entrepreneurship, results matter most. Results for you, results for your clients, and results for value. People need to think it's valuable. So if you're going into partnership, write it down.